Good afternoon, everyone. My name is Ram Dhamija. Today is 11th of February, and I bring to you the market update. So today has been a very bad day for the markets. There has been a secular fall, and the it has been building up for quite some time now. And today was kind of a culmination of all that build up which has been happening. And I have been saying for many days that the market is looking very bearish, and also that is being shown in the open interest that is getting built up. Also it is showing in the Nifty levels which are not crossing any significant upside. In fact, we have not been able to even cross the budget high that we had made, and we have just been falling. And the worst part is that Nifty is still okay, but the broader indices are completely getting ripped apart. So be it small cap, mid cap, all of them are down 3.5%. Alpha, momentum, some of them are down 4% also. So it's been a complete sea of red that is happening, and I will show you why that is the case and what are the inferences that we can draw, and how the markets are poised going ahead into the next week. What are the derivative cues looking like? What are the key levels to watch out for? What is the role of gold? What is the role of international currency that is playing out? So all these factors I'm going to discuss with you today, and I will take you through one by one what is the implication of each. So I will first start off with how the Nifty has behaved, the Nifty chart, and I shall take you through what are the key levels to watch out for. So as you can see in the chart over here, this is the Nifty chart for one day. Now what you can see over here is that there are three blue lines. The first blue line is the budget day high. The first blue line is the intermediate high that was made. The second blue line is the next higher top that was made, and the final blue line over here that you are seeing is 26,254, which was the high made. The budget high that was made was somewhere around 23,600 odd. Now we briefly crossed that for one particular day. As you can see over here, we had crossed this budget day high for one day, but after that we have just secularly fallen. And now the problem is that we are coming closer towards 22,800, which was the last top. Now as you can see over here, this is a line which this light blue line that you can see over here, this is the line which indicates how the tops have been made. The first top, we all know, 26,200, then the second top 24,800, 24,200, and this top was not even able to reach to 24,200. It in fact retraced back from 23,780. So it is a clear pattern of lower lows and lower highs. Now whenever this happens, that basically indicates that the market is going down. And now it's probably just a matter of time until something significant happens, something significant changes, that the market might breach this 22,800. Now let us look at what is happening in the open interest. Now as we look at the open interest for Nifty, this is the total open interest. As you can see, there are 20 crores calls that have been written in the system versus 10 crore puts. The PCR is 0.49. I don't remember when last I saw this PCR of 0.49. Probably it was a month or two back. And whenever we see this kind of a PCR, we see usually capitulation happening. And today could be a capitulation day wherein mid-cap and small caps have fallen by more than 3%. So this PCR is definitely not looking good, and it is not a very healthy sign. Now let us look at what happened in the straddle part. Now straddle opened at fairly decent levels of around 280. There was a nice gentle drift of till 220, but then immediately came the downfall and the straddle spiked. So there is huge volatility that is increasing in the system as well with this particular downfall. It was all going smooth, but then suddenly this huge selling wave came, and we are seeing that even the straddle premiums have gone up. Now let us have a look at how the indices have performed. The worst, okay, so I'll start off with VIX. The VIX has shot up by 3 percentage points, so it's at about 14.87. But now let us look at how the indices have performed. So small cap is the worst performing index at minus 3.4%. Now everyone was saying that retail is buying and it is good, they are holding the market because they have been investing in small caps. All that is fine, but when the market actually falls down, you see that it is retail which panics the most. So 3.37% down small cap, mid cap almost 3% down, PSE is almost 2.5% down. Media, energy, auto, pharma, FMCG, all indices are down today. So Nifty 50, as you see, is fallen the least at minus 1.2% as we speak. So there is still about 20-30 minutes for the market to close. But this is what the situation is right now. So this is the problem area, and I don't think micro cap is over here. Otherwise, that would have probably fallen even more than the small caps. So lower the market cap of the index, the more questionable the names, the higher the fall. So that is a big problem, as we can see. Now coming to a very important part, what is happening in the US dollar. So today, very interesting thing happened in the US dollar. Yesterday, as you can see, the US dollar had touched almost 88, 87.98, as you can see. This was the high that was made. And today it just got crushed. So there seems to be some sort of an intervention that has been done by the central bank, which has ensured that the rupee crushed by almost 1 rupee. So yesterday it was 87.8 and 9. It is now 86.9. So I believe there is a lot of flow of rupees that has been put into the a lot of flow of dollars that has been put into the system to buy the rupee by the Reserve Bank, and that has caused this decline in the dollar rate for the rupee. Now, typically this should be good for the markets, but this will be good if it falls on its own. But if there is an intervention and the rupee is being trying to be managed, then the market sometimes feel that there is a bigger problem and that is being trying to be addressed. So it has got no impact today. In fact, the markets have shrugged this and the markets have fallen even further. Now coming to the heat maps, how the heat maps looks. This is the Nifty 50 heat map. So you can see that there have been a lot of names that have fallen. Autos have fallen, like Eicher Motors down 6.5%, Hero Motors 2.8, Tata Motors 2.8. In terms of industrial services, Coal India minus 3.2, BEL minus 3.5. Apollo Hospitals and Max both fell down minus 6.5% for Apollo. Financials were not spared. Bajaj Finserv minus 2.7, Shriram minus 4.3, HDFC Life minus 3. The situation in Nifty next was no better. So if I just show you, sorry, excuse me for this. Yeah, so situation in Nifty next is no better. As you can see, Geo is down minus 3%. DLF is down minus 3.28. IRFC is down. Siemens is down. Zomato is down minus 5%. Gale is down. Naukri is down. PNB is down. Union Bank is down. So everything is down by minus 3. Varun Beverages is down. And if I go into the Nifty 500, the situation is even worse. There's a sea of red, as you can see. So there's no point talking about stocks which have fallen 7, 8, 10%. So there's a whole host. You can just take your pick and you will find everywhere. So the damage to the indices is quite severe as we speak right now. And now let's quickly have a look at the international cues, what the international cues are indicating, and then I'll come to my analysis of the markets. So the international cues right now are not bad per se, because there is nothing wrong except for odd Nasdaq futures, which is down minus 0.3%. Rest everything looks okay. Bitcoin is at 98,000, which is fine. Dollar index is at 108, which is okay. Brent oil is at 76, which is okay. Our currency is kind of stabilizing. Yes, the main thing that is happening is the gold. Now, as you can see, gold has been continuously making new highs. So, gold futures in the international markets have crossed almost. Sorry, yeah, there you go. The gold futures have almost crossed 2,900, and it crossed this about 2-3 days back, and that is the impact that we are seeing in our Indian markets as well. So you can see over here the current rate is 2909, and it actually went up to 2940, and because of that, the Indian gold rate has gone to about 87,000. So this was about in terms of the charts. Now, where do we go from here? The thing is that we are seeing that all the cues are negative, and the next logical support for the market is 23,800. Not support, I would say the next level for the market is 23,800. If we break that 23,800, then there is going to be a bigger downside risk that is going to open up. Now, I don't know what the trigger could be for that. Is it just going to be FII selling, which is going to open the gates on the downside, or because all the positive things have been factored into the market? The budget was good, the election results were favorable to the market, there was no the interest rate cut happened. So all the good news has been discounted by the market, and the market refuses to go up. In fact, it just goes down. and without any negative news, the market is falling. So my worry is, if there is a negative Q that comes into the market, then what is going to happen? We don't know what that negative Q could be. There is some crisis that is building up in terms of gold deliveries on London. I don't know how credible that news is, but what we are hearing is that there is a 3 to 4 week wait time by the Bank of England for delivery of gold in London. So that, I don't know whether that can become a big crisis because the way price of gold is moving up, or is it something internal that might will cause the market to completely break down? I don't know, but the cues right now are not very favorable for the market. So that is what my worry is, that without any negative trigger right now, the market is going down. But having said that, this is also the time to start looking at individual names, indices, mutual funds, etc. Because this is the time when a lot of people make their portfolios. When indices have fallen 20, 30, 40%, that is a good time for building up your portfolio as well. So like I'm utilizing this opportunity to add to my favorite indices, my favorite mutual funds, etc. And also I've said this before, that I also help people build their portfolios in mutual funds. So I'm a qualified mutual fund distributor as well, NISM certified. So if anyone is interested in building their mutual funds and trying to learn how to benefit from this market, I have a very structured approach towards that. So there's a form in the description, you can fill that, and I'll get in touch with you personally, and we will discuss your requirements and how I can help you in that. Because these corrections are not to be wasted also. Maybe a year down the line, we will think that, oh, this was the golden period to buy also. So one should not waste these opportunities, but at the same time be sensible. Don't invest in stocks which are questionable. Try and keep yourself limited to mutual funds, to ETFs, etc. Because that they never go down to zero. So that is one good thing. And maintain an asset allocation, which is very critical. So like we have seen how gold is helping everyone right now, or if anyone has international exposure to US equities or US indices, how that is helping because of the dollar going up. So having a proper asset allocation wherein you have gold, equity, fixed income, international exposure to equities, bonds, etc., ensures that your portfolio goes up smoothly. So which is very, very important. So having said that, that's the update from my side. It's not a very pretty day. Oh, by the way, for option selling, it was not a bad day per se. I forgot to tell you about that. So Sensex expiry went off very smoothly. Now one might ask how, especially considering when there was such a big fall. How? Because I've already talked about the concept, something called as stop profit. So there should not be only a stop loss in the system, there should also be a stop profit in the system, which I have kept it at a certain level. So it was a very smooth decay for me, and I got out after the max stop profit hit for Sensex positions. Those Sensex positions are very less compared to my total overall size of the book, but that ensured that there was a nice profit at the end of the day, and the day is going to close in green in spite of such high volatility, because of course the puts went off for Nifty and Banknifty as well, but the calls more than made up for it, and Sensex there was overall decay, so which actually helped a lot. So that's it from me. That was the update, and if you like the content, please do subscribe to the channel. I would love to read your comments, how your day went and what do you think about the markets. So please share your comments, and I shall see you tomorrow with another update. Have a nice day. Bye-bye.